This is a complete guide on how to start forex trading in 2026. A lot of people are looking for different information on how to start forex trading, asking questions like, what is forex? How do I trade forex? Do I even need to involve money in trading forex? What am I buying in trading forex? Well, I got you all covered. This is a complete video on a step-by-step way of how to enter and become a successful trader in 2026. Now guys, don't forget, this is the Dizolian podcast and we are specifically here for forex trading. So this is my guide that I've made for you to show you on how to start forex trading in 2026. The step one is you should know what is forex trading. Forex trading is the act of buying and selling currencies to make profit from the changes of the pairs. If, for example, you buy Euro USD versus gold and the market is bearish, so you are making a profit from if the market goes from for example 0.04 and goes to 0.05. We have made a profit. We have something called pips in forex trading, that value. So whenever the pips change, you have made a profit. For example, from 0.04 to 0.0010, you have made a profit of 10 pips. The second thing you have to know in forex trading is similar to the foreign exchange markets that, for example, I'm flying out to America, so I will be in need of the USDs, the dollar. So I will go to the foreign exchange markets and I will be wanting to buy the dollars. So the price at which they will sell me the dollar is, if for example I'm buying the dollar at, let us say the dollar is at 3,600 UGX, Ugandan shillings, equals to 1 USD. So there I've bought 3,600, I've got $1, and I've stocked, let us say that I've stocked 30 USD. So the price of gold goes up. The price of gold goes up when I have already my $30. When I already have my $30 and the price goes up, let us say like 5 to 6 pips, and it goes from $1 is to 3,600 to $1 is to 3,000, let's say 900. And if I'm to sell my $30 again, if I'm to sell my $30 at 3,900 UGX, I'll be making a profit of 9,000. You just catch the 108,000 and subtract the 117,000 and get the profit of 9,000. So guys, in that way I've profited out of my exchange. So there is a very small difference between the forex exchange, the physical one, from this one called forex trading, because in forex trading you will not get the physical paper, but we will just be trading your money on the charts. So you do not expect to be getting the dollar note, because this one is like it's like digital. You're trading it digitally from a broker. Anyway, we shall get at that point. So that's the introduction of forex trading. So in forex trading we have different pairs that are traded in forex. For example, we have the Euro USD, have the GBP USD, and the XU USD. So this one are the different pairs that are traded as pairs in forex trading. So how trading works is very simple. You just need only to have your computer and access data. That's the only. So guys, we have two types of trades. We have the buy trade and the sell trade. The buy trade is commonly known as the bullish trade, and the sell trade is commonly known as the bearish trade. So guys, these are some of the different terms you really need to put in your head, and you'll come across them in different videos and different things that are talking about trading. So guys, don't be confused when you hear someone say that gold is bullish, either euro USD is bearish. So don't become confused. I've already given you the meaning of those two terms. So the second term we're going to look at is what is a pip? A pip is a small movement in price, and this is usually what gives us our profit or loss. If, for example, when gold moves 5 pips in your favor, let's say you say that gold is going to be buying and it moves 5 pips in your favor, in other words, you have made a profit. And if it moves 5 pips in not in your favor, in that words, you have made a loss. So a pip is a small movement in price, and we measure our profits in pips. The other term is a lot size. This is a trading size. For example, you want to start trading, you have your $10. So you ask yourself, how much do I want to be exposed in the market? So in other words, you choose your lot according to your the account size you have. For example, you have $10, so you choose the lot size according to the account size you have. In other words, the lot size is number that we choose to expose in the markets. For example, the common sizes we have the standard lot, that is the standard lot is 1. So we have the minimal lot, which is 0.10, and the micro lot, which is 0.0. So in most cases, as a beginner trader, you're going to be using 0.01 as your lot size. So the second term we're going to be looking at is a stop loss. A stop loss is a level where a trade closes automatically. So when you are trading, guys, you don't expose all of your account, because to be able to trade in the long run, you know guys that in trading you are not going to always be profitable. Some trades will be wins, some trades will be losses. So if it comes to losses, you have to when you enter trade, you have to calculate the amount of money you are willing to risk. So that's where you place your stop loss. Are you getting me, guys? So a stop loss it closes your trade automatically when it goes not in your favor. So guys, I hope you have got that. A take profits, this is a vice versa, the opposite. It's a level which closes automatically after price going in your favor. In other words, after you go in profits, a take profit closes automatically. It's like an automated system. So these are the different things or tools that help you when you are trading forex trading. So for example, if you want to make a table like this table we are using, you have to get nails, a hammer, you have to get a saw. So this to refer to forex trading, these are the different tools that you will have to use in order to execute your trades. So the first one is I've listed them here very quickly: the forex charts, the candlestick patterns, trend analysis, support and resistance. Most traders also use indicators and price action. Example of trading: we have two types of trends in the forex market. We have the uptrend. In other words, the uptrend is where the market is going in the upside. In other words, you can also say that the market is in the bullish trend. In an uptrend, we shall see it's characterized of higher highs and higher lows. The market will be making higher highs and higher lows. Let me just show you quickly here. If you see, I don't know if the camera will bring it clearly. This is what I'm calling the high highs and higher low. In other words, the market is in an uptrend. So the second one is the downtrend. In other words, you can call it the bearish trend. So in this way, price is making lower lows and lower highs. So guys, don't be confused with these terms. Slowly by slowly you get used. Guys, after knowing what Forex is, the next step, in other words, this is the second step, you should look for education. You should go through YouTube. There is also the baby peeps to looking for education, at least to get the basics of Forex trading, so that you can be able to get used to the tools. You'll be able to get used to the charts, the Forex charts. And that's the second thing you need to do, looking for education in whatever way you need to do. So the third step is getting a mentor. Now guys, when I started my Forex trading, I first struggled for like 1 year without a Forex mentor. But I realized that if you get someone that has got the experience in trading Forex, it will take you at least a very short time of period to master the charts, compared to someone who is who's making research for them or for themselves, because actually the markets are very wide and it needs a different kind of understanding. It needs someone to break down for you the different analogies and terminologies of Forex trading, be it the fundamental analysis, be it the technical analysis. So guys, a mentor is someone you need to guide you through the wilderness of Forex trading. And who is a mentor? A mentor is someone to teach who has experience and he has been in the markets for a long period of time, and he's able to analyze the markets and is able to transfer the education and the knowledge he has obtained from the Forex market for that period, and he teaches you his strategies. So that's what. Now guys, the fourth step is getting a reliable Forex broker. Who is a broker? A broker is a company that gives traders access to the markets so they can sell the currencies. Think of a Forex broker as a middleman between you and the global currency market. Without a broker, you cannot trade Forex trading, because Forex is a very wide market, and you as a retail trader, you find that your volume is very low to actually trade the Forex markets. What does a broker do for you as a retail trader? A broker provides a trading platform for you. In other words, it provides a MetaTrader 4 and the MetaTrader 5. It gives you a server to be able to connect to the live markets, access to the currency pairs, for example the XAUSD, the gold, access to the market prices, trade executions. A broker helps you to execute your trades, and in other words, to set your take profits and stop losses. A broker actually helps you to give you leverage, and leverage is I'll be explaining that later. The broker also provides charts and different tools to enable your analysis be smooth in the trading markets. So this is what to look for in a good broker. Regulation. Choose a regulated broker for safety. For example, different brokers do not have regulations, maybe those ones that I've just stated, but a good broker should be regulated. We have that regulation, whatever that regulates different brokers. So the second one is low spreads. A good broker has to have low spreads, and it should provide you with low spreads to avoid slippages during placing execution of your trades. First, a good broker should be able to provide you with fast executions. In other words, if you want to buy gold at 3675 and the broker, you execute your trade at the market execution, the broker needs to be in place to execute your trade at that given price you have executed at. That makes him or he a very good brokerage firm. So these are some of the examples of brokers, the regulated brokers that I can actually recommend for you. The first one, IC Markets. We got Exness, we got Preparatory Traders, Exim, and FP Markets. And don't forget, I'm going to be linking the link down in my description for the broker I use, and that's Exness. Don't forget to go down in the description and click into the link below if you are in need of Exness broker. And guys, Exness is a regulated broker. You can find them in the link below. So those are the types of different brokers that we have, the regulated ones that I can actually recommend to you. Important warning, not all brokers are trustworthy. Before depositing your money, check reviews and verify the regulation of the broker you want to actually choose. So guys, getting to the fifth step is actually demo trading. After getting a mentor, after learning a strategy, you actually need to demo trade and to test out your strategy for a certain period of time. You have to first test the waters, and I don't want you to test the waters using your real money, because that one is risky, because you don't know what you're doing. So in other words, it's very risky to enter the trades in a live market. So first